All right, welcome to The Explainer. The Bitcoin market right now, it's sending some seriously mixed signals. So today, we're going to try and untangle all of that. Let's cut through the noise and figure out what is really going on.
I mean, look, the market is just paralyzed. It's totally stuck. Bitcoin has been trading sideways for what feels like forever, and pretty much everyone is asking the exact same question. Where does it go from here? Are we going to the moon or back to Earth?
And hey, if you're looking to the experts for some clarity, good luck with that. You're just not going to find it. The forecasts are completely all over the map. You've got one analyst calling for a massive rally to $250,000, and then the next is warning of a drop all the way down to 94 grand. I mean, that huge range is creating this thick fog of uncertainty for anyone trying to figure out what to do.
Okay, so this number really puts that feeling into perspective. 20. That's the latest reading from the Crypto Fear and Greed Index. And a score this low, that means we're in extreme fear territory. Now, that sounds pretty bad, right? But here's the twist. Historically, in a bull market, moments of extreme fear like this can actually be a signal that we're closer to a bottom than we are to a top.
So, okay, why is everyone so confused? And why is the fear so thick you could cut it with a knife? Well, it turns out that all the reliable tools, the maps, the compasses that investors have used for years to navigate Bitcoin cycles, they're just not working anymore.
You see, for the longest time, you could pretty much just look at a calendar and get a decent idea of how Bitcoin was going to perform. There were these predictable seasonal patterns. Certain months were almost always bullish, others were bearish. It gave traders a kind of framework, a bit of an edge.
But this year, that whole framework has just been completely shattered. Just look at this. 6 out of the 11 months so far, that's more than half, have totally defied their historical patterns. Months that were supposed to be strong ended up being weak, and vice versa. The pattern is officially broken.
So what's the big takeaway here? It's that we just can't rely on past performance alone anymore. That old compass is broken. It's not going to guide us. If we want to understand where we're actually going, we have to dig way deeper and look at the fundamental forces moving the market right now.
All right, so let's get into it. The real reason for all this strange behavior in the market, it's actually not some big mystery. It's a massive system-wide problem. And believe me, it's affecting a lot more than just crypto. And to really get this, we've got to talk about a key concept, market liquidity. So what is it? Well, in the simplest terms, think of it as the amount of cash just sloshing around the financial system, ready to buy stuff. When there's high liquidity, it's super easy to buy and sell assets. But when liquidity is low, well, the whole system starts to dry up. And right now, that system is drying up, and it's happening fast. The US government shutdown is basically acting like a giant vacuum cleaner for all that cash. See, the government is still collecting taxes, pulling money from all of us, but because of the shutdown, it's not spending that money back into the economy. So that cash is just sitting there, locked away in treasury accounts completely out of the financial system. And this number, wow, this really shows you the sheer scale of the problem. In just the last 30 days, a staggering $700 billion has been sucked out of the system. That's not a small leak, folks. That's a severe liquidity drought. It's having pretty much the same effect as if the central bank was actively trying to slam the brakes on the economy. Now, this whole liquidity drain thing, it isn't just some abstract economic idea. It is creating intense, very real pressure on critical support levels in the Bitcoin market. And we can literally see the damage it's causing in real time.
For Bitcoin, the big line in the sand is $100,000. For more than 182 days, that level has held strong. It's been this powerful psychological floor for the market. But with less and less cash in the system, the pressure on that floor is just building and building with every single dip.
And you can see that pressure perfectly right here in the spot ETFs. For a while, we had all these strong inflows. Money was pouring in, but that trend has reversed, and I mean dramatically. Since late October, it's been nothing but massive, consistent outflows. We're talking hundreds of millions of dollars leaving these funds day after day after day. And look, this goes way beyond just the day-to-day price swings. This liquidity crisis is creating real systemic risk for some of the biggest corporate players in the game. We're seeing signs that giants like BlackRock might be getting ready to sell. At the same time, you've got companies like MicroStrategy sitting on over 600,000 Bitcoin and the Japanese firm Metaplanet. They are feeling some serious heat as the price keeps dipping below what they paid for it.
Okay, so I know this all sounds pretty grim,
But, and this is a big but, history actually gives us a really compelling reason to be optimistic. There is a potential light at the end of this very dark tunnel.
You know, this is not the first time the U.S. government has shut down and basically choked off liquidity from the market. It's happened a bunch of times before, and we can learn a lot by looking at what happened right after those other shutdowns ended.
And history is incredibly clear about this. As soon as a shutdown ends and the government turns those spending tabs back on, whoosh, liquidity floods back into the system. And what happens then? Risk assets, like the stock market, they tend to rally. And not just a little, they rally hard. On average, the S&P 500 has jumped 9% in the 90 days right after a reopening.
So why does that stock market data matter so much for crypto? Well, this number says it all, 80%. That's the correlation Bitcoin has shown with the S&P 500. So, when liquidity comes back and stocks go up, Bitcoin tends to follow right along. This historical pattern suggests a really powerful rebound could be just around the corner.
So all of this sets up this fascinating battle in the market, right? On one side, you've got this overwhelming public fear. You see it in the ETF outflows, you see it in the panicked headlines, but on the other side, you've got what some people call the quiet money. You've got these really sophisticated players, guys like Adam Back, who are publicly buying the dips. You've even got entire countries like Kazakhstan reportedly thinking about adding Bitcoin to their reserves. It's a total standoff.
So, if there's one thing you should take away from all this, it's the incredible tension that's at the heart of the market right now. It is a standoff, plain and simple. You've got this severe, very real liquidity crisis pushing prices down today. But then you have this powerful historical precedent that suggests a massive rebound is coming. And the market's fate, it really seems to hinge on just one thing: when this government shutdown finally ends.
And that leaves us with one final, kind of provocative thought to chew on. While all the headlines are screaming fear, and you see regular investors selling off, someone is down there placing hidden buy orders, absorbing all of that pressure below $100,000. It really makes you wonder, doesn't it? In a market that's so publicly gripped by fear, who is all that quiet money, and what do they know that the rest of us might be missing?